In today's market update, we're going to be taking a look at several markets around the world, and we are going to be discussing the trough that we have now confirmed, the trough that formed in the middle of April. We'll be discussing the magnitude of that trough and what the implications of it are. So here is the analysis of the S&P 500 working with SPX data. This is the analysis we've been discussing for some time, and as you can see, here is the trough that formed in the middle of April, which has now been confirmed as a trough of the 20-week cycle. In our previous market update video 2 weeks ago, that was certainly the most likely magnitude of that cycle trough, but we did still have the slightly remote possibility that the 20-week cycle trough had formed as a straddled trough earlier, and that this was a 40-day cycle trough. The reason for that was because this is a long 20-week cycle at 175 days. It is not impossibly long, as I've discussed before. The average length of a 20-week cycle is 136 days, and so that is why we were considering that possibility. However, the recent price action has confirmed the bullishness of the market as price has risen out of that trough, thereby confirming that this is a trough of 20-week magnitude. Another confirmation that this is the 20-week cycle trough that has formed is provided on the weekly chart. This is the FLD of the 20-week cycle, and of course following a trough that is of at least 18-month magnitude, we would expect price to find support at the level of the 20-week cycle FLD at the time that the 20-week cycle trough forms. And so there is our 20-week cycle trough, and here is price very accurately finding support at the level of that 20-week FLD. Looking at the implications of the confirmation that this is a 20-week cycle trough that formed, here is the 20-day FLD. Price, as you can see, crossed that FLD over here over the weekend at the end of April and generated a target just a little bit above current price action at about 52.70. And so price has not yet quite achieved that target, but given that this is a 20-week cycle trough, we would expect it to achieve that target, after which it will drop down into a 40-day cycle trough. It will be interesting to observe how it interacts with the 20-day cycle FLD on its way to the 40-day cycle trough. Given the bullish underlying trend, it would not be surprising to see the 20-day cycle FLD provide support at the time of the 40-day cycle trough. If price does succeed in crossing down below the 20-day cycle FLD, we will of course generate a target to the downside. That 40-day cycle trough is expected sometime next week. Zooming back out again, you have probably noticed this floating circle and whiskers for the 40-week cycle trough. Why is that? I've discussed this in previous market updates, and I don't want to repeat myself too often, but the reason why this circle and whiskers is so displaced is because of the fact that we have phased this trough over here in October last year as an 18-month cycle trough. In a moment we'll zoom out and we'll see that we have had to compress cycles in order to position that as an 18-month cycle trough. By compressing those cycles, the calculation of the recent average wavelength of the cycles becomes distorted. And that is why we have this strangely positioned circle and whiskers for the 40-week cycle trough. Zooming out to include the October 2022 trough, which you can see in this analysis has been phased as a trough of the 54-month cycle, you can see the unusual compression of the cycles that has been performed in order to position the 18-month cycle trough over here at the end of October 2023. That gives us a 379-day 18-month cycle. Now, the average length of an 18-month cycle is 546 days. That is the average length calculated as a matter of interest by Hurst over 50 years ago. There is some debate, which you will probably be aware of if you've been watching these market update videos, about the magnitude of this cycle trough in October of last year. Is it a late 40-week cycle trough, or is it an early 18-month cycle trough? It certainly seems possible that it could be a late 40-week cycle trough, particularly because of the fact that we have now witnessed an extended 20-week cycle, which ran at 176 days instead of the average 136 days. It could well be that all of these cycles are stretching. That doesn't change our current bullish outlook because of the fact that price is bouncing out of a 20-week cycle trough. But it does warn us that the next 20-week cycle trough might be a bigger magnitude cycle trough, not only a 40-week cycle trough, but in fact an 18-month cycle trough, and therefore we might need to prepare for some bearishness lying further ahead. I would like to point out something else that is fairly interesting about this analysis in the S&P 500, and you will find this applies to many stock markets around the world. If we measure the number of days from the October 22 trough, and come forward 546 days, which, as I've already mentioned, is the average wavelength of an 18-month cycle, you can see that that brings us to only a few days before the 20-week cycle trough, about a week before the 20-week cycle trough that formed in the third week of April. That's a really interesting situation. Does that mean that it is possible that this trough that formed in the third week of April could be an 18-month cycle trough? Well, it's very unlikely in my opinion, but that measurement certainly enhances our bullish opinion in terms of what is happening in the market at the moment. Let's take a quick look at the FTSE. This is a weekly chart of the FTSE, and the reason why I find it so particularly interesting is because in the FTSE, you can see, we have in fact positioned an 18-month cycle trough over here in the third week of April. Now, the principle of commonality tells us that markets move with a great deal in common. When an 18-month cycle trough forms in one stock market, it doesn't mean that an 18-month cycle trough is definitely forming in every other stock market. There will be some variation in terms of the magnitude of those cycle troughs. But I find this a particularly interesting analysis because of the fact that this analysis really works in the FTSE. When I last discussed an analysis of the FTSE, I pointed out that it was a very messy market to analyze, and it was a very complicated analysis because of the fact that we were looking at an 18-month cycle trough forming fairly soon. And as opposed to what one would expect, the market was increasing in bullishness. The interesting thing about the FTSE is that it has undergone a long period of consolidation, this fairly triangular type of formation that has played out pretty much throughout 2023 into the beginning of 2024. That sort of consolidation is always a challenge for a cycle analyst because of the diminishing prominence of the troughs that form during that consolidation. Positioning the 18-month cycle trough here is a fairly aggressive analysis, but it is interesting that it positions it at 553 days, only a week after the average length of an 18-month cycle discovered by Hurst so long ago. I'm not absolutely convinced that this is the correct analysis for the FTSE, but it is certainly an interesting one, and it increases our attitude towards the bullishness of the markets, or I should say of stock markets at the moment around the world. Recently, we've been looking at the Australian index, the ASX, and this Australian index was the one where it was most possible that the 20-week cycle trough had formed over here in the middle of March, and that we were going to experience a straddled 20-week cycle trough with a fairly bearish 40-day cycle into this trough in the middle of April. As you can see, the analysis has shifted and positioned the 20-week cycle trough over here in line with the position of that trough in the US markets. The reason that has happened is apparent when we zoom in. It has to do, of course, with the way in which price has been interacting with our FLD. Here is the FLD for the 20-day cycle, and I pointed out in the previous market update video that price had not yet crossed the 20-day cycle FLD, which it should do, of course, following the formation of the 20-week cycle trough. It did eventually manage to struggle up above the 20-day FLD, as you can see over here, here. It pretty much tracked along that FLD, dipped below it for about a day on Monday of last week, but then managed to find some strength and climb up above it. That was the evidence that we needed to confirm that the 20-week cycle trough was in fact positioned here and was not a straddled trough positioned earlier in March. The outlook for the ASX now matches the outlook for the US markets. We are expecting a 20-day cycle trough to form. It is in fact possible that that 20-day cycle trough should be positioned over there. And the next cycle trough to look out for is going to be the 40-day cycle trough, expected towards the end of May. Again, we will be watching price interacting with the 20-day cycle FLD to see whether it manages to cross below that 20-day FLD on its way to the 40-day cycle trough, in which case it will generate a target to the downside. Taking a very quick look at the Nasdaq, we have a cleaner analysis in the Nasdaq than we do in either the S&P 500 or the ASX. Again, we have the 20-week cycle trough over here in the third week of April. Price crossed up above the 20-day cycle FLD over this weekend over here and provided a target. I believe that target is just above 18,400. So that target has also not quite been reached. We have the 20-day cycle trough that has been found over here at the beginning of May. And so our next cycle trough is going to be the 40-day cycle trough, expected in about 10 days or 2 weeks. And again, we will be watching the 20-day cycle FLD to see how price reacts to that FLD as it moves down towards the 40-day cycle trough. When I say as it moves down towards it, I do not mean that the peak has formed and that the market is already moving down. The peak must first form, and then, of course, price is expected to move into the 40-day cycle trough. Gold also managed to cross up above its 20-day cycle FLD last week, thereby confirming the position of the 80-day cycle trough over here at the beginning of May. That provided us with a 79-day, 80-day cycle. And in gold, the next thing we're looking out for is the 20-day cycle trough over here, expected probably towards the beginning of next week. Our expectation for that 20-day cycle trough is that it should find support at about the level of the 20-day cycle FLD at that time. Again, we will watch the 20-day cycle FLD to see how price reacts. If it finds support, then we will be looking for a further price rise before price turns down into the 40-day cycle trough over here, expected at the beginning of June. We need to keep a close eye on this new 80-day cycle that is unfolding because of the danger that I have been discussing fairly often in recent market updates of the possibility of a straddled cycle trough. We need to be aware of the potential danger of symmetry in a market whenever a cycle trough forms. What I mean by symmetry is that we might see a reflection of the previous price action. Now, I am aware I should be careful of saying something like that because some comments on the previous market update video made me realize that people might be misinterpreting this as a suggestion that we are definitely going to experience a double peak. I am not saying that. I'm saying that that is always a danger and we need to stay alert to that danger. This is not a forecast, it is simply a possibility. The other possibility, of course, as also mentioned in the previous market update video, is that the cycle trough will not turn out to be straddled, and so we will see a renewed bullishness as price forms a more bullish M shape for the next 80-day cycle. The important thing is that we are aware of the possibilities and monitor price action, particularly as it interacts with the FLDs, to stay on top of the current mood of the market. Finally, taking a look at Bitcoin, we have been trying to position the 80-day cycle trough in Bitcoin, and now it seems likely that the 80-day cycle trough did form similar to that trough in gold in the first few days of May. The price of Bitcoin has managed to cross above the 20-day FLD, as you can see over here, but it really struggled to get through it, as I think you can see. In fact, let's zoom in for a minute. Here you can see that last week price came up to the level of the FLD and found resistance at that FLD. It only managed to cross above the FLD almost by default, by simply standing still on Saturday night into early on Sunday. That price cross does generate a target to the upside, but it's not a very impressive target. There is the possibility that this 80-day cycle trough is therefore not correctly positioned. So we need to stay alert to that and track the way in which price interacts with the 20-day FLD as it forms a potential 20-day cycle trough over here towards the end of this week or early next week, and then of course the 40-day cycle trough over here in June. Zooming out a bit, we can pay further attention to these circles and whiskers for the 18-month cycle, the 40-week and 20-week cycles. As you can see, they are displaced to the left. Of course, these circle and whiskers, as I've already discussed many times, are based upon the recent wavelength of those cycles. And when you see circles and whiskers that are displaced like this, it does indicate that there are some anomalies in the analysis, or at least that cycle wavelengths have been found to be changing recently in the analysis. In particular, of course, we've had difficulty positioning this 80-day cycle trough, and there are various other possible positions for that 80-day cycle trough, as I've discussed in recent market update videos. Each one of those 4 circles that I've drawn are a potential position for the 80-day cycle trough. When we don't have confidence in the position of that cycle trough, I find it useful to measure the number of bars and compare that to the average for a cycle wavelength. So measuring from the trough in September of 2023, that was a trough of 40-week magnitude, finding the position of the next 40-week cycle trough, that is an average length of 272 days, you can see the time that that trough is expected is over here on the 8th of June. Looking at the circle and whiskers for the 40-week cycle, you can see that positions it on the 26th of May. So in other words, the end of May or early June are likely positions for that 40-week cycle trough. We had a very well positioned 20-week cycle trough that formed over here in January at 135 days, only 1 day short of the average wavelength of a 20-week cycle. If we measure forward another 136 days to the likely position of the next 20-week cycle trough, you can see that is on the 7th of June, only in fact a day before the position of the next 40-week cycle, using the average wavelength of that cycle to calculate its position. And so, although the nest of lows for this 18-month cycle trough seems to be focused towards the end of July, we should be aware of these circles and whiskers and of the average wavelengths that indicate the potential for a fairly big cycle trough of 18-month magnitude forming over here towards the end of May or early June. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.